straight to the next panel session, which is about the role of finance in speeding up the transition towards this circular economy, especially related to cities. And I'm happy to ask Mr. Jamie Butterworth to come forward to the stage and introduce his panel. Ah, there he is. Good to see you. There you go.
Hello, everybody.
Don't forget to ask.
Good morning, everybody. So this session now is on exploring finance and in the circular economy. And what we're looking at here is, as we seek to migrate from today's linear take, make, dispose economy to one which is ultimately circular and restorative, it's likely that we will need finance and investment at some significant scale. And you could say that to move the whole of the economy to a circular state, you would need capital markets themselves to change to make that transition possible. So I'm very excited that this morning we have representatives from a range of financiers and investors who are looking at the circular economy right now as an opportunity for their activities and their clients, and are playing a role in this transition. The way we're going to run this session is we're going to make it quite interactive, so not going to kind of do a presentation slideshow. I'm going to ask a series of questions to the panelists. We might bring up the odd slide to introduce some different topics, and we're going to try and make sure that we have plenty of time for a Q&A at the end of the session. And with that in mind, if I can ask someone like Lewis, how long do we actually have until the end of the session? Oh, we've got loads of time. We're fine. Okay, perfect. So I'll introduce myself very briefly first, and then I'm going to introduce the panelists. My name is Jamie Butterworth. I am a partner in a specialist investment fund that supports SMEs operating in the circular economy or enabling the circular economy. So we provide them with capitalist and specialist support. And in a previous role, I was CEO of the Ellen MacArthur Foundation, which was how I became involved in the circular economy. So I'm going to introduce you very briefly and ask each of the members to say a few words about themselves. Over to you, Gerald.
Thank you, Jamie. My name is Gerald Naber. I work for the ING Bank, a global bank headquartered in the Netherlands, where we service customers from retail all the way to large corporates. I work in the sustainable finance team, and we've been working a couple of years to get sustainability more and more a topic within the bank. And the best thing about, one of the good things about circular economy is that it's a narrative and it's a theme that a lot of people pick up really quickly on. So it really helps to drive the sustainable and the circular economy, the agenda within the bank as well, because a lot of people understand the concept and see the opportunity.
Can I just borrow the mic? Oh, we've got two mics.
Yeah, we got two. Hi, good morning. Frido Kraanen, PGGM, Dutch pension service provider, working for 3 million people around and having 200 billion euro assets under management. So we are an institutional investor. And mainly two reasons why we're interested in the circular economy. And the first is, when you're in pensions, you're in the long term. And we don't only mind that they have enough money, enough pension money in the long term, but also what the state of the planet or what the state of the people is in that matter. And the second, and that's related, is we don't only invest, but we try to be a responsible investor. And increasingly, that is also about resources and resource scarcity.
Thanks. Yeah, my name is Wayne Hubbard. I'm the Chief Operating Officer of the London Waste and Recycling Board, which is a partnership between the municipalities that form up Greater London and the Mayor of London. We have a developing and expanding circular economy program. Originally, we were looking at waste and recycling, hence the name of our board, which is very end of pipe, and we kind of realised, as anybody who saw Ellen speak, we realised that what she said, that recycling only buys you time, it doesn't really solve the problem. So we've kind of moved much more of our programs to think about how we can accelerate the circular economy in London so that we can become less end of pipe and less waste managers and more systemic in our use of resources.
Buenos dias a todos. Good morning, everybody. My name is Max Tellini. I'm the head of circular economy at INTESA SANPAOLO Financial Service Group. INTESA SANPAOLO is the bank behind the Made in Italy success around the world. We pride ourselves in being the financial institution behind the real economy, and we are a bank which is driven by a strategy of building success with our customers. We are a relationship-driven bank, and we have a systemic role in the economy. That's why we believe, and we got inspired by the vision of Ellen MacArthur and by the strategy advised by the Ellen MacArthur Foundation, and that's why we became the financial service global partner of the foundation. We ask ourselves a very quick question. What does it mean for a financial institution like Intesa Sanpaolo, a so sustainable financial institution, to deal perhaps with not so sustainable clients? That's where our journey on circular economy started.
Very good. Can I just ask that I can transition the slides if I need to, if that's all right to... Yeah, perfect. Very good. So I'd like to ask the first question to Wayne, which is, so you guys are sitting there in the audience thinking I'm going to come to a session on finance and investment and things in the circular economy. So straight over to Wayne. Why would one be interested in investing in the circular economy? From your perspective as someone who's looking at London as a city and looking to try to work out where the opportunities are for London, whether that be economic growth, resilience, etc. Why would we be interested in the circular economy?
Well, yeah, I mean, I'm clearly the odd one out in this audience. We're not a financial institution, we're not a banker, but we do make investments in businesses. We have a track record of investing in waste facilities, for example, which is quite, I think it's unique in the public sector. But, you know, this slide is a slide that illustrates the 5 business models that I think sum up the circular economy. There are other ways that you could kind of examine the circular economy using, for example, the Ellen MacArthur Foundation Resolve framework. But this is work that was done by Accenture in looking at businesses around mostly Northern European manufacturing businesses. And these 5 business models, if you think of those as horizontal lines on a vertical lines on a matrix, so you've got recyclable renewable input, making something that is recyclable and renewable. Prolonging product life, so design for durability. You've got the sharing economy, and you've got products as services, so servitization. Those 5 things, I think, for me, kind of sum up the circular economy. And if you've got those as vertical lines, and then across that, we've done some work in London that identified sectors where we could accelerate transition to a circular economy. And those sectors are the built environment, food, textiles, plastics, and electrics. So if you've got SMEs innovating, now you've got like cells in a matrix. If you've got them innovating in all of those cells, the sharing economy in textiles or plastics or whatever it is, recyclable material into textiles, you know, that kind of stuff. If you've got lots of businesses innovating in those areas, you're starting to generate a system in a city that is regenerative by design, where value is the key thing here, not waste at the end of pipe, but value. And so, for example, I think, again, Ellen talked about this in her keynote speech, space is crucial in a city. So if you've got the sharing economy, if you've got designers working on developments, if you're like a city like London, where we think we're going to move from 8.6 million to 10, 11 million people in the next 10, 15, 20 years, then space becomes a premium. So how can a circular economy add value? So by investing in all of these busy, innovative SMEs working hard in those areas that are making money, we can change the system. And I think that's happening already, actually. I think there's lots of people out there doing that already. And what they lack, and I'll come on to this a bit later, is they lack financial support, they lack policy support, and they lack mentorship. So we can help to galvanize transition and enable them to do their busy work, which starts to change and transform the system. So we don't become waste managers, we kind of become enablers.
Very good. I'm going to ask a similar question to Frido. So Frido, you work for a very large pension fund. How many euros do you have under management at the moment?
Around 200 billion.
200 billion. Okay,
Yesterday, so I don't know what this morning will be, but
about 200 billion.
Yeah.
So your job is to effectively manage that money on behalf of your clients. Can you give us a kind of insight into why the circular economy would be relevant to an asset manager of that size?
Yeah, when we first heard about the circular economy, we thought, well, it isn't about us because we don't make anything, so we don't have waste, or our clients don't have waste directly from us. But then we thought, well, we started it really, to be honest, from a CSR perspective. We thought, okay, it's very important for, we know the narrative, like Gerald said, it's very important. So from our CSR program, we say we want to help accelerate this. And we took a little deep dive, and we read the reports of the Ellen MacArthur Foundation. Well, we were drunken with joy, because you're going to earn money. And when you say to an investor, you're going to earn money, well, everybody, so we were cheered, we were completely have festivities for a week. And then we woke up. And then the third reason, and maybe this is the biggest driver for us now, is that we have portfolios. The 200 billion is increasingly of linear risks. So they're all linear risks in our portfolio. And I think the linear risk is relatively new. And we are very, well, it's not really happy is the good word, but it's good that we have something. We talk about climate risk for 10 years now, and everybody now understands what climate risk is, and I hope they will keep remembering it in the States in these days. So we have climate risk, and then we try to focus it, mirror it to linear risk. And the reasons to be involved kept on increasing, and you see here the 5 reasons that we, in the working group on financing the circular economy, came up with, and it's, the first is increasingly linear risk implies risk. And this is in the portfolio, and it's in your pension money as well. It's in your bank. So it's increasingly important also for the clients. But also the second and the third reason is important. If you know something about the new technological changes, the change of internet, we see that these sustainable business models really adapt better to the new environment and to the new conditions. And being in the finance industry, we have the easiest jobs here compared to you, because it's back the winners and avoid the losers. And in the end, if you understand that circular business models are really more modern than linear business models, you should try to understand and know how these businesses will develop. But in the end, I think the biggest driver is just financial and non-financial, just like good business should be.
Very good, thank you very much. So Gerald, when we look at finance and the world of finance, we're talking about quite a big spectrum there, I think. I always think about this, that we each have our own view of the financial system, whether that be from an SME level or a corporate level or even an asset management level as a pension fund or at a VC stage. Can you give us an idea of what we're talking about here, the scale of that spectrum and how one might interact across it?
Yeah, I'd love to. And the reason why I think it's maybe, and if you know about this, then I'm sorry about this, but what we tend to hear a lot from people that we talk to or are looking for financing, whether it's be an SME, a startup, or a corporate, that there's financing on itself is not always money. And what I've shown here on the slide is you see the growth path of a company. It goes, from a concept stage to maturity. There's also the value death there as well. It's a model, of course. And there's typical demands for financing at typical moments in time of that company. Just to give you an example, maybe to make it a little bit more in your everyday life, if you would go from here to the airport, you need a mode of transportation, so to speak. You keep it at that high level, but depending on your time, how much time you have, or your budget, you can go either walk, you can take a bike, you can take a taxi, maybe you can even charter a helicopter, whatever your needs are. And in the same way, it goes for financing. So, as a bank, we work with money from people that put it at our banks or savings money. Pension funds work with pension money. The board in London works with governmental money. INTESA is also the bank, and you guys work again with money from investors with a different view and a different view on how to use that money. And that is very important to understand what kind of risk you can take and at what moment in time can you support a company that is looking for financing. So, and that's what I like about this panel. We have quite a lot of different pockets of money, so to speak, talking about the circular economy, and that all of those pockets of money are needed to make that happen. Because we're talking about large corporates making transition, but also the startups, and they have maybe a higher risk, again, a higher risk profile that a bank cannot support. Maybe a pension fund also not, but then again, maybe JB can support that. So that's why I wanted to make sure that people understand that the need for financing determines in the moment in which you ask for it, determines also the risk and the source where you go for your financing. So here you see some examples of where you can go to. These are the traditional sources, so to speak, and also on the green you see maybe some new examples of crowdfunding, peer-to-peer lending, and those are, of course, we'll have to see if they also become mainstream, but they also play a role in helping, in so to speak, that financial ecosystem of supporting companies from startup all the way up to maturity in the circular economy.
And actually, while you're on that, so peer-to-peer lending and crowdfunding, how is that kind of changing the market at the moment in your view? What's happening there at the moment? Could that be an opportunity for the circular economy?
Very much so. We've seen a few clients that indeed have gotten to the first stage or the second stage maybe because they were able to attract money from the crowdfunding. It could have been maybe that they found customers who were willing to pay for their product already at the start, so they got the money and then only ordered to make the product. So you see, the example is the Fairphone. I'm not sure if you know, but they worked on that model. So they asked people to buy the product, although there was no phone yet, and with that money they could actually have the phone produced. So that type of crowdfunding, or in basically that's money at risk or equity financing, you could call it. If you're in, that is definitely a way to help startups to scale to a second next stage. So it's those are more and more important source of financing. Yeah.
Very good. So I think this is one thing we're always kind of challenged to think about on this topic, is that this is everything from, in order to make that transition from linear to circular, it would need to involve finance and investment at the level from seed funding, crowdfunding, all the way through to listed markets, to bonds, and ultimately to sovereign wealth funds, for example, and pension funds, as to how that would work. And that's why I think it's interesting to get input from people at different parts of the finance spectrum, which are quite separate. So over to Max. Now, you are head of circular economy at INTESA SANPAOLO. The question I'd like to ask you is, when we think about circular business models, what, if anything, is actually different about a circular business? And as a financier or a bank, how should one look at that, and how would one take advantage of these types of opportunities? What are the kind of challenges and opportunities?
Wow. Is a challenging question. I would start just going back one step, which is what I do personally believe from a financial institution perspective, at least for INTESA SANPAOLO, before selling credit cards and home loans, we do intermediate trust. So circular economy for us is a way to reinforce trust within the stakeholders in the economy at all levels, so that opportunities can be shared and can be created. And that's where I personally believe there is a key concept for a financial institution to gain an opportunity from the circular economy to rethink about risk. When we do look at linear business models, which has been actually what we've been doing for ages so far, we do have the question about the real value of the collateral that we get when we do a loan. And there is not better evidence of the existing situation, at least at European financial institution level on non-performing loans, which is educating us, is telling us how urgent is a need to reconsider how risky simple linear business model can be in terms of not being able to offset risks in the supply chain, and how productivity could be boosted thanks to circular business models. I do take the real estate example as one of the most striking examples for ourselves. We do finance real estate extensively. Already in the real estate, there has been an understanding on how the credit that you do really depends not just maybe on what kind of factory you are going to build, but what you are going to do with that factory. Because the market risk that goes on with the productivity, with the production of that activity, underlines the risk of the counterparty that we are going to finance. However, this has been a sort of gradual learning that we already had. Now we are seeing even more that in order to assess the creditworthiness of the counterparty, it's important to understand how the physical asset, for example, in the real estate, could be repurposed, could be reutilized, could be refocused in order to have additional use in terms of extracting and creating value. This is something which is pretty straightforward from a credit perspective, because the cash flow coming out of that activity can be reassessed in terms of the potential activities that that asset is going to perform. What is the next stage and where the opportunity, we believe, is advancing the understanding from a credit perspective in order to make sure that already what's happening in the credit policies of financial institutions is allowing entrepreneurs and builders to make sure that when they look at some project in the real estate, they can already factor in what we do treasure. And what we do treasure is additional capacity to extract value. And that's where circular economy poses a great kind of opportunity in trying to make sure that maybe the next generation will be circular real estate. And just because we are talking about smart cities, we have been witnessing personally an amazing project in Brazil talking about social housing. I mean, we do talk about smart cities, but frankly, honestly, sometimes we do not have smart citizens. So if we do want to accelerate the transition, of course, is a matter of education. Financial institution has a great deal in better understanding what's already going on. The new frontier could be like for the project that we are witnessing in Brazil, trying to build not just a social housing project, but a smart social housing project. And the next step could be a circular social housing project. Because thanks to technology, risk can be reduced, risk can be spread over across a bigger portion of assets. And so economies of scale and differentiation is going to diminish risk for a financial institution looking at financing this kind of asset. So just to conclude, circular economy from ourselves is a great opportunity to rethink the concept of risk in the financial industry.
Very good. Thank you, Massimo. Now, one of the things that we heard about this morning from a number of speakers was one of the transitions in the economy from linear to circular will result in different business models. And one that we hear about a lot, if we are to maintain the ownership of an asset, we may ultimately end up not selling the product, but selling the product as a service, or selling the performance of the product, or servitization. Now, what I'd like to do now is ask Gerald a little bit about this topic, which is something which ING has looked into in terms of specifically what are the differences in financing a product as a service system, which hopefully is interesting for those people who may be thinking of business ideas around that or involved in businesses that are on that trajectory at the moment.
Yes, thank you, Jamie. Indeed, of the models that also Wayne expressed, is the product as a service is probably the model that really ties in all the aspects of a circular business model. So it's closing the loop. It's giving the responsibility on the performance of the asset or the product to the producer, letting the consumer only benefit the use of it and all the services that go along with it. But the shift from selling a product to rental or leasing or give it a name Sounds on paper simple, but it's not that simple at all. I mean, we've spoken to a few clients that want to make that transition, and they basically what they have to do, they have to transition so much internally that goes from very simple KPIs on how their sales organization is being incentivized to sell. You know, normally they are being they get the target to make a sale, so many sales or revenues per year. That's going to be shifted to, okay, you're not going to be selling it, you're going to be getting an annual income over 7 or 5 years or what have you. So it's a very how do you measure that, and how do you
Can you also just give us an example to put a bit of color on it? What kind of thing are you talking about here when you say shifting from a product to a service? Just a kind of industry sector or?
Yeah, we see there's a lot of development in the furniture sector. That's a very easy one. Alan also mentioned the carpet producer, but we've worked with a company that manufactures or assembles chairs, chairs with for offices and not so much for their homes, more for the business to business. They wanted to make that shift, and so they had all of those problems or challenges with the Salesforce I just mentioned, your whole warehousing. So because you're going to get all those chairs back after 5 or 7 years, they were talking about 5-year contracts. Do you have the capacity in place to refurbish them? Can you give the parts you cannot reuse back to the producer or the original producer who sold you the parts? How do you finance this? And that's of course the question that they brought to us. Then we looked at it, and there's a couple of the points you see on the screen there that we ran into. The first one they immediately obviously saw is if you don't sell it. So you produce this chair for 100 euros and you sell it for 120 euros. And if you decide to not sell it for 120 but spread it over time for 5 years and get, let's say, 30 euros a year, you immediately have a working capital need of that 100 euros that you have to pay to get the chair manufactured. So how do you overcome that? Then with that chair, they remain ownership, they remain the owner, so that 100 euros, or 120 actually probably, has to be activated on their balance sheet. And if you understand the balance sheet, it has to be balancing. So if you get more assets, you also probably have to have some more sort of liability. So that would be either financing or equity, or do you have the capital to support that as well? Cash flow management of it. So you have to manage those cash flow coming in over the time of the contract. Credit risk. Max already told about it a lot. The credit risk and the ability to pay from your customers for the next 5 years immediately reflects on the risk that you have as a company, as a chair manufacturer. So are you able to oversee that? Can you bring in the right customers with the right credit worthiness? All of those questions are new, and they ask a lot of the whole company to rethink their model and get the right assets and the right people in. There's a couple other things that are also on the page. I won't mention that. Last point I want to mention is valuation, and that's maybe a call out to the accountants. The valuation of the product that they are giving as a service and to activate on their balance sheet is also a key component in this model. And I think the accountancy is a big task there also to help us in understanding the right valuation and the right risk assigned to that chair in this case. Somewhere out in the country, giving someone the service to sit on it. So, yeah.
And I think one of the exciting things about this as well is that it isn't as if these ideas are unheard of. It's often that they may have been well proven and tested and have risk models and credit agreements and legal agreements, etc., well established for certain industry sectors. But as the economy migrates and we begin to see more circularity in other sectors, it's about learning and being able to connect the knowledge to be able to make more of those opportunities across the economy, I guess. Now, I'd like to go to Wayne now and just say, so this all sounds like a great opportunity. What can we practically do to accelerate this transition? So you're looking at this from a London perspective, huge city, more than 8 million people living there, lots of very innovative businesses, larger businesses. What do you think we can practically do, and what types of things are happening now to help to scale this up?
Yeah, if you could just slip this. So this kind of speaks a little bit to Gerald's last but one slide. Yeah, I mean, the scale of that, when Jamie just told me how big London is, just made me a bit scared, actually. But I try not to think about it too much. But yeah, it's a big challenge. But but we've put together a program, or we're starting to put together a program that kind of addresses some of the issues that we've talked about here today. So across the piece, if you think of businesses in those kind of those buckets, if you like, startup, seed, growth, sustainability, I think Gerald had it slightly differently. And we're thinking about investing in the Valley of Death area, which is how Gerald had it. So that's quite comforting. So that's two scary things I've learned today. So, what can you do? How can you help these businesses? We'd like to have some kind of circular economy accelerators in London, probably based on those horizontal focus areas that I mentioned earlier. So maybe textiles or electricals or built environment or food, and make it sexy, make it interesting. Get big corporates to offer pro bono management support. Use this to be an innovation lab for those big corporates to see if we can get materials innovations or business model innovations or whatever it is that they can buy into and put some equity into. So we have this accelerator program. We might have, say, 12 or 10 or 12 businesses 3 times a year going through a structured program where they're really just starting with an idea that they pitch to us, and we have a kind of big pitch day. We make something of it, and then we go. The successful ones who are still operating after 12 weeks and we like their ideas, they can go through to a subsidised incubator that we're thinking of setting up. And that might be a business opportunity for us. So we could get involved in the workspace market. I think, who was it? Ellen again was talking about SANPAOLO, who are doing some of this. And I really like that idea. And we're thinking of replicating something like that in London where public space can be offered up to SMEs. So we could have some of that market and make some money out of that at a reasonable price, have subsidised workspace. And at the end of that, maybe a year, if those businesses are still operating, if they've successfully navigated their way out of the Valley of Death, then maybe we can start to invest in those. So we're going to put together a venture capital program with big corporates and with some European money that we've levered in. And then we're also investing in some kind of growth capital fund to then take them to the next stage, which is growth. So we have this structured program where we can suck SMEs into the start of the pipeline and take them through a journey where there will be investment at the end of that journey, and underneath all of that will be a circular economy business support program, which we'll probably call something like Advanced London, and that program will support those businesses and other businesses in London with opportunities to access finance, write business plans, and the like, and all of that will be a kind of, hopefully, fingers crossed, will be a program that we can start to piece together over the next few months. So I can't remember what the question was, but I hope I've answered it, because I'm really excited about this. I think this is, as far as I understand it, it is unique in having this thing that is particularly focusing on circular economy businesses. This is well known in the linear economy, but we're now looking at circular economy businesses.
I think you nailed it. So on to Frido now. So Frido, you chair a finance working group, which was set up a couple of years ago to look at finance and the circular economy and overcoming the systemic barriers. Could you tell us a little bit about the group, what you've achieved so far and your ambitions?
Yeah, well, now I'm scared because Wayne said you need to make it more sexy, and then you have a pension guy heading this working group, and that's the least sexy business I know. It was 2.5 years ago where we founded this working group. The first thing we thought, everybody's saying it's not like I think everybody did. When you talk about circular economy, the first response is, oh, that's smarter recycling. And then everybody said, no, it's not smarter recycling, it's a kind of systemic change. Well, and that sounds rather great. And then we thought, okay, what are the system elements then that contribute to this change or to the transformation in the real economy? And what we really did was try to say, okay, it's about legislation, it's about customers who should join in, it's about education, but it's also about money. And all these system elements should enable the transformation of the real economy. And to be frankly, every system element is disabling this transition now, also money. And for instance, the example that Gerald gave, the first response of a banker or an investor would be, if you don't sell it right away and get your 200 euros, but you get 5 euros a month, for instance, there's credit risk, your solvency is lower, so you have to pay me more premium, risk premium. And there you see, with a linear glasses, a banker or an investor looks to new circular business. And when we founded this working group, we had 3 very simple goals. First was understand what's happening and what the role of money or finance is. The second is adapt our business. If we understand something, because we didn't understand, and frankly, sometimes I don't understand it at all these days, but if we understand it better, then we can adapt maybe our business. For instance, should we have other risk assessment schemes when we have a circular business on the other side of the desk than when you have a linear business? And the third was share it with our colleagues. We have now 14 organizations like ING and INTESA is member of this working group, and share it with, and we're relatively big, but we're less than 1% of the world economy. So share it with all the other financial industry to say, okay, these are our findings. And in last March, we published a report as a working group called Money Makes the World Go Round. It's true. But will it help to make the economy circular as well? And we looked really into the 3 big domains of money, finance, and circular economy. One is the changing of business models and what it has to do with financing those businesses. Secondly, was on the corporate finance. So what should we change in corporate finance when we see businesses change? And the third is on the macroeconomic impact, because that's also relevant for big financial institutes, what's happening in the macro economy. What we're doing right now is that we talk, I think 4 times a year with new circular business, and just have a workshop kind of approach to say, okay, what's changing in your business? What would your business be if you were linear and now you're circular? What's the differences, and what is the impact on your financial situation on that? And I think, like Gerald's show with the product as a service, it's getting more complex. And the linear model is the default, but it's also an easier model than a complex product as a service model. And we really should adapt to that. So that's the current phase we're in now.
Very good. I think it's also interesting that some of this work is also feeding into an increasing focus by the World Economic Forum on finance and the circular economy. And I think it's fair to say that the World Economic Forum has done a fantastic job of engaging the corporate universe around the circular economy, starting back in about 2011. And now it is quite a widely understood term with global corporates in different industry sectors, from automotive to textiles, whereas I think the financial industry is somewhat separate. So we are hoping as well that this work will filter through that very high-level convening audience and help to bring some of these larger financial institutions on board. I think the other kind of ambition to some extent is this is quite a European group at the moment, and we will seek to reach out and make that more global, because ultimately, in order to make this transition happen, it will require the entire economy to shift. So if we have any international financial institutions here who'd like to get involved, we'd be happy to talk to you.
You can download the form on the website, yes.
Right, I'd like to go over quickly again to Massimo now, just to talk about how to get people on board with this, and education and the circular economy. So you've managed to get your institution and your bank at quite a senior level on board with this. Can you give us a bit of a flavor as to how that happened and what you're now doing?
Absolutely. I have a slide.
There's your slide.
Just at the bottom right corner, you do see the Innovation Center of INTESA SANPAOLO. That's where we started. I was anticipating to you before, the quick question that we start from was, what does it mean for a financial institution like INTESA SANPAOLO to be so sustainable with maybe not so sustainable clients? That drove us in the conversation a little bit away from the standard approach on corporate social responsibility and moved quickly in the realm of innovation. We set up an innovation center 2 years ago, and I do work with the Chief Innovation Officer of the group on circular economy, because for us, Circular economy is most importantly innovation in the business model, in the approach to how we do finance. Intesa Sanpaolo is a financial institution which looks at the value chain of our customers. We don't just focus only on a single customer. We do look at the value chain within his industry, within his project. And so from an innovation perspective, for us it's pretty peculiar to understand how central education is. Taking inspiration from Ellen, I would say for us it's important to sail the ocean of risk. And in doing so, we need to have a good chart. We need to get practicing. How? Trying to understand what others are doing, how they are doing, and why this has to be a systematic approach collectively. But the bank itself has to learn. What you see on paper, on the slide, is just a very simple kind of diagram of what we have been doing so. A top-down approach, of course, is required if the chief executive doesn't believe in the circular economy, doesn't push for this on the agenda. It doesn't simply happen within the organization. However, this is just the starting point. You just see the circular economy journey within a traditional standard kind of credit structure within a bank. We at Intesa Sanpaolo we are a very solid financial institution. We came very, very well positioned after the stress test at European level. We do manage risk, so we are pretty good at that. We need to learn how to advance this understanding, and that's where we are right now. So from a sort of one-by-one evaluation, which is occurring right now, because what's happening is somehow exciting and intriguing, but is dominantly new. We know that we need to look at what's happening with new lenses, but it doesn't happen on a nightly basis. So we are looking at a phased kind of approach, considering a watch list for circular economy, emerging innovators, large corporates already doing circular economy transaction or projects. We then try to understand what the correlation is. And we may discover that not just sustainable financial institutions are looking at these projects, but also that the companies that are doing so are moving quickly from just environmental and social compliance to a much more innovative approach. They are looking at how they can create new value, trying to make partnership with suppliers or with some of the customers along the value chain. And that's where for us is better understanding how big corporates can cooperate among themselves, maybe just on the real estate sector, for example. Talk about Philips lighting, talk about carpeting, talk about paintings, talk about others companies working on the same transaction. The risk profile of this deal would be tremendously different from a linear one, just because of the interaction among different actors. Are we ready to issue new policies? Are we ready to reward entrepreneurs and companies that want to venture along the journey of circular economy? The answer is yes, we want to make sure we are ready. And in order to do so, we are looking at how we do rate transactions, how we do read the risk within these businesses. And then if we are successful, as we are trying to become, there is plenty of room for us to do business with the new frontier of champions. Because what we understand very well is that the champions of today could not be the champions of tomorrow in a changing environment. So through the circular economy and through the redefinition of how we do assess and we do appreciate risk, we may be able to spot the champions of tomorrow. And what we want to do is to match the champions of today with the champions of tomorrow. At the Innovation Center of INTESA SANPAOLO, we have a matchmaking platform. We have programs for startups. We do have programs for education. INTESA SANPAOLO is financing the very first master in bioeconomy and circular economy in Italy. We are partnering with 4 top universities in Italy. We want to advance academia in Italy to understand what from our side is important. And this goes back to accounting, for example. Do we do account? Do we teach how correctly value is captured through accounting, for example? So education is key, and for us, learning experience is important in order to be credible as a financial institution along the journey of circular economy.
Thank you, Massimo. Right, and we're shortly going to finish our discussion, but just one last question for Frido. Is finance actually the biggest challenge? What are the other challenges, Frido, in your view? How does this fit in?
Yeah, maybe from my perspective, got some bad news that a good circular idea is not automatically a good business idea, and it really isn't helping. I'm working, yeah, it does, and it is that and if you have a good circular idea, you come on a market where everything linear is the default, and when you and governments, they just have in the Netherlands had a brilliant. Beautiful program on paper, but they still think linear. If you want to repair something, your tax burden is much higher than when you want to buy something new. And when you talk about reverse logistics, when you're a circular business model, you have to pay for the reverse logistics. When you throw something away, it's for free. So in the end, linears are still really are favored above circulars. And it's also that when you are a circular company and you're preventing externalities and they're still unpriced, you solve something for society, but you don't get rewarded in your business model. So that's the reason why from a legislative perspective, the linears are 1-0 ahead. But it's also about consumers. I saw the whole room, and I think we are here in a room full of believers. I only saw iPhones. I only saw Samsungs, and I didn't saw, for instance, a Fairphone. And consumers, to change consumer mindset, because they have to join this movement, is also very important. And still throwing it away is much easier than thinking, how should I return this product? It's the same about supply chains. And we heard beautiful stories about collaboration in the supply chains, but the default is still, can my supplier do it a little bit cheaper? It's not. It's competition within supply chains, and it's not really collaboration. And where we talk about also, I think I'm ending a rather sad, or not?
I was going to say, this is typical from a finance person to talk about
building
risk
up risk,
at the end.
building up
What he means is there's a massive opportunity
is,
here. This is what he's talking about. It's very positive, isn't it,
yes,
Frido?
Yes. Now, what I mean is it's not only the access to finance, or financial industry adapting, it's all the stakeholders from this systemic change should also adapt, and we should work together. And the worst thing that could happen, this is my last sentence, Jamie, the worst thing that could happen is that we have, because nobody thinks that we don't have a circular economy once, in 2050, 2060, because the linear model is unsustainable. So we're gonna have someday a circular model. But how do we gonna get to that moment? And my worst fear is that we have an unmanaged transition. And the unmanaged transition is slow, it's very expensive, it creates a lot of destruction in your economy, and I think working together, that's the biggest challenge we have.
Very good. All right, great. So we have some time now for Q&A. Now, what I'm not going to do is take one question and get every single person on the panel to answer it, because that could go on for some time. So I'm going to take the responsibility of choosing one of you to answer the question, and you may not like that, but we'll bear with it for now. Who would like to go for a first question? We've got some here, have we?
This is the intern too.
Fantastic. Okay, this one is going to go to Wayne, because it's of your particular specialist subject. How can we best translate the concepts of smart cities and/or circular economy to the general public who might not know what it means?
Oh, I like that one. Okay, I'll be a bit controversial here and say, do we need to? because I don't think that we can ask people to change their habits so much in a kind of sustainability world that they feel they are worse off, because that's not going to change the system. So systemically, things will change, and they will change in a way that people, I think, almost won't realise. So, for example, I think we've reached peak stuff. And I noticed that the way my daughter works and operates is different from the way I operated as a child and my parents operate. Maybe it's more similar to the way my grandparents operated, bizarrely. But her interaction with technology means that she doesn't really want to buy CDs and DVDs and records. Maybe when she gets to be 16, she'll think it's cool to own vinyl, I don't know. But at the moment, she's quite happy downloading stuff for iPlayer, and she's quite happy downloading books to read, although she does like picture books. So, you know, we're kind of moving in, I think, to a different way of consuming, and I think that's good. And I think it's even better if we don't realise it's happening. So my job isn't necessarily to convince people or try to explain the circular economy, because I think it's difficult enough to explain the circular economy to you guys because it's a complicated subject. I think we just have to kind of crack on and support really good ideas and good business models that are in the circular economy space, and people are consuming them. People don't want stuff so much. They want to subscribe to stuff. They want to have access to stuff. I don't want to own a washing machine. It's a pain in the arse to own a washing machine because I have to get it fixed. I would love someone to lease me a washing machine for an affordable price. I didn't have to get fixed. And I think a lot of people are starting to think that way. And I know that a lot of companies see value in having a long-term subscription relationship with the consumer rather than that one-off point of sale. So I guess that's a long-winded way of saying, yes, there's some kind of balance in people switching over, but I don't want people to wear the hair shirt of sustainability.
Very good. Thank you for that, Wayne. We also take real questions from real people as well as ones on the screen. If people want to put their hand up and ask a question, that's highly appreciated as well. Do we have any real questions? Only digital ones at the moment. People can actually come up and stand at the microphone as well, but I assume anonymity is prized. So we'll go on for another one now, and this is probably best asked to Frido. Frido, are you integrating circular economy into the ESG ratings of your portfolios now, or can you imagine that in the future?
Yeah, well, first of all, we use it in engagement policy. So every company we own stocks that we have an engagement strategy with, we ask them, just simple ask them, do you have critical materials and what's your policy on that? So that's also, I think, impact. And then secondly, we are now working on with the Dutch cooperative circular economy on a circular assessment tool. And it's a way that we try to assess how circular, and it's a very difficult question, you should imagine, how circular is the business. And if we have, like we do with ESG tooling, we also have indicators just asking when you're performing less than average, then we can also put this into the engagement negotiation or talks with this company. And what we do is that we avoid a certain percentage of the bottom and we divest from them. So that's a kind of way to help the circular development by getting out of the 20 or the 10% lower scoring companies, like we do it, for instance, with climate as well and CO2. And then give extra attention to the companies who are best in class. So we will use it as a part of the environmental part of the ESG, but not yet because there's a little evidence or little data yet.
Understood. So I think for Gerald, this question around if you were to look at a circular strategy executed with an existing company, would you, from a financial perspective, favour that to be executed internally within an existing company or spun off into a separate company? So if you were a big corporate and you thought, right, there's a massive opportunity for us to shift from being a linear business to a circular one, can I actually move the supertanker, or do I need to spin something off into a new company that could potentially disrupt me, but I could own?
Very interesting question, and very actual question that a lot of clients work on. depends a little bit what your view is. I think if the corporate who is developing a new circular model keeps it internal, they may move quicker. They probably have more resources and more attention and maybe to work on it quicker. However, if it is disruptive and if it is, as I mentioned before, if you have a set of make it very simple, like financial KPIs for your sales force, or the cost price for your logistics that does not look into the reverse logistics, or all those things. If that takes too much time to change your current policy or way of working, or set in second next to it, then maybe you're better off putting it aside in a separate company. From a financial perspective, as Frido mentioned before, it could well be that that circular activity that they're developing could be way more risky than their current business. All on the back of what I just said before, maybe credit risk is there, or the residual value is not known. So mixing those two risk profiles may not be a good idea. And from that perspective, so if you put it in a separate company, then whoever is asked to finance it could have more of a separate view on if they are willing to take that risk and support it, yes or no. More conceptually speaking, if I move to the product as a service model, and I might get a little bit technical now, but if you want to develop a model where you do this via a leasing or a rental model, then you simply cannot make that affordable if you also have the need for, let's say, a 30% equity. Because the equity that is provided, it has a too high demand for returns. Makes it it's costly money, so to speak, very costly investment. To incorporate that in some sort of like leasing or product as a service model, it's probably going to make it unaffordable and not as cheap as the washing machine you wanted to be cheap on a rental model. So you probably, from that perspective, you would have to separate aside and find a different financing structure for that to make it happen. So I guess coming back to the question, putting it separate has a lot of advantages, but it may slow down the pace. But I definitely see that it becomes more clear to everybody involved what kind of risks there are, and to give it the right resource and financing need to make it happen.
I think we need to see your 10-minute YouTube presentation on that in the next couple of months, if that's all right. Now we have a question from a physical person, so please ask your question. And if you can say who you are and where you're from, that would be great.
Yeah, thank you. Well, first of all, I'm glad to be a physical person. So thanks for that. My name is Ignacio Cubigna. I've been working in circular economy and cradle to cradle for almost 10 years now. So first a comment, then a question. First comment is that I'm glad to see the financial world at this stage today, because I think that you are giving a very, very, very strong message to the market. And that's really critical. I mean, we work with industries, we work with real estate developers, and we know how critical it is. My question then is, we're talking financial here, we're talking liabilities here, we're talking, how we define capital. What, in your opinion, should be the role for insurance companies? I know that you are not insurance companies, but what should be the combination of your efforts and the efforts from the insurance companies? Thanks.
That's a good question. And as we don't have an insurance company here, it isn't an obvious one. Would any of you, I think Frido, as the chair of the CE group, may have to take that one.
I totally agree that there's also impact. When you look from the financial side, you have the three big pillars are pension, I always start with pension, of course, banks and insurance. And I think we don't involve them yet. And it's like the evaluation questions came up later. And then we asked an accountancy firm to also join the working group. But I agree, and I see changes in insurance models as well. And for instance, when you talk about liabilities and you want to insure those liabilities, when Wayne's moving to Amsterdam, where he can rent his washing machine at bundles, then he could say he's not owning the thing, but he can break it. And who is then liable for these damage? And when you all go to a product as a service model, you see changes in liabilities relatively dramatically. When you go to all kind of service concepts. So we're now buying stuff, and then we all leasing our complete household, for instance. And then there should be also adapting from the insurance field. And I must say, This is the first time I get this question, and so I never thought about it. So thanks for that, and really I think it's good. And maybe banks. I don't know. You once owned a very big insurance company, so maybe you can call them. And then maybe I think you have an insurance branch as well. Yes, he has. So we need to involve them as well. But it's now too conceptual for me to give you a direct answer. Maybe we can talk about it later on.
Yeah, maybe if you have specific questions as well, it's something that we occasionally do with the group, is to outsource specific questions to look at through this working group. I think question now for Wayne, actually, there's a question from someone called Robin around what's the role of policy and legislation. So we're hearing about this opportunity now, so possibly there's some latent opportunity to be captured now. But is there anything that could be done to accelerate this transition? And if so, what would be the top of your list?
Okay, so you might have heard this phrase before, governments talk and the cities act. So I'd rather just get on and do stuff. And although, I'm not a policymaker, I do have access to policymakers. But London actually has relatively, compared to other cities around the world, relatively few powers to make this happen. So our best hope is with the UK government. I'm not going to comment on that, except to say I just think we just should crack on and get on with it as a city. So, I haven't got any policy recommendations. There's a whole host of stuff that can happen. And I know there's a debate within the circular economy world about regulation and markets. But, we are where we are. So there's stuff that can happen. I don't think I need to wait for that to happen. I think this is an opportunity that is there and is nascent and that we can start to accelerate now. There is stuff that can happen down the line. There's planning policy that we're hoping to influence right now in our strategic plan for London, and that planning policy can unlock a lot of opportunities and ask people to think, earlier on in the stage of design, how they can build in, for example, modularity within buildings. We can work with our partner agencies in the city to think about how we can incentivize sharing apps and free up that space opportunity that moving away from the car would offer cities, those kind of things. But actually they're all stuff that we could be getting on with and doing. So I'm a kind of let's get on and do it and not worry too much about lobbying for policy changes from national government or European government, because we'll be waiting here for a while, I think.
Frido, another comment?
Yeah, you cannot say anything about Europe, of course, when you're from the UK. Oh, no. No. If I have to answer this question from my perspective, number one on my wish list, if you want to really get your economy to a circular economy, change the tax on labor with your tax on buying stuff. The tax on labor is too high, the tax on buying stuff is too low. So if you turn that around, it doesn't cost you any money as a government, but then really you have a very, very, very big incentive to go to circular and go away from linear. So in the Netherlands in March, there's the election, so maybe we can do something then.
Yeah, and if anyone's interested in that topic, I think there's two. One thing is Walter Stahl's work on a functional service economy, where you start to shift taxation towards resources which are not renewable, and onto things which are renewable, including, away from labour, which is renewable ultimately. And he's done a lot of work on that. And there's also e-tax as well, I think, in the Netherlands, that has a lot of resources on that specific topic. I think just one final thought from my side as well on the policy and legislation piece is in our activities investing in SMEs and raising finance from private capital to invest in a fund to do that. One thing, I think a lot of investors have had their fingers burnt investing in certain industry sectors which have been dependent upon policy and legislation. So, for example, some renewable incentives. And I think when the sort of finance industry and investment professionals are, for one thing, very pragmatic. And I think the opportunity exists to crack on, as Wayne says. There certainly are things that could accelerate this transition. And one thing I would urge you to have a look at is the Swedish government's policy to look at reducing VAT on remanufactured products, for example, just as one example. And the Ellen MacArthur Foundation's work on policy toolkit, which looks at different levers, and for Robin's question, kind of which ones one might put at the top of the list out of an arsenal of different ideas. So we are very close to being out of time, so I'm going to summarize at this point and say that I think we've covered quite a bit. We've covered the scale of the opportunity. We've covered the scale of the challenge and the size of the global financial markets and system and what might need to happen to make that transition happen. But I think excitingly also we've heard a little bit about different kind of points of acupuncture within that system that are already being made, and that maybe we have some of the knowledge and the tools already required to make that transition. So we, as a group, would like to thank you as well for coming along and asking so many great questions. We didn't get to answer them all, and we'd like to hear from you if you've got pressing questions, or even if you've got interesting businesses that may require finance or input or insight in the future. So thank you very much to Massimo, to Wayne, to Frido, for Gerald, and to all of you for coming. Thanks a lot.